Okay, fabulous. So let's try that out. Ladies and gentlemen, it's with great pleasure that I can introduce the founder and CEO of Wefox, Julian Teicke.
I thought I'm going to stand in front of empty rows because it's the first one in the morning, and thank you for changing that and having an energetic room. Yeah, I'm really happy to be here. My name is Julian. I'm the CEO and founder of Wefox, and when we started Wefox in 2015, the term Insurtech didn't yet exist. And then started the hashtag Insurtech. And there were, I would say, 3 different schools of thought of how Insurtech could disrupt insurance. So one of the schools of thought was, we're going to have to make the human agent obsolete. So what we're going to do is we're going to create an amazing customer experience, which is so good that customers never ever want and have to talk to a human again. That was one school of thought. There was a second school of thought, which was the way to approach insurance is by making a couple of things in the value chain a lot better. I mean, claims sucks, right? So let's make claims a lot better. I mean, underwriting sucks, so let's make underwriting a lot better. And just by that, we can build giant technology companies. And then there was a third school of thought, which was, in fact, no, the human agent is not dead. 9 out of 10 insurance policies are sold by the human agent. Let's help the human agent sell insurance more customer-centric and more efficiently. And back then, when we started Wefox, I actually called my dad. And my dad is 20 years insurance broker. I was like, we're starting this new company, Dad, can you please help me? And he told me the story that Wefox was founded on and based on, which essentially is, listen, people need a human being. Don't write off the human agent. This is an emotional relationship about an emotional product. You're talking about the potentially worst moments in your life. You're talking about what happens to my family if I die. You talk about what happens to my family if I cannot work any longer. What happens to my family if I have a terminal illness. You don't want a robot to answer all of these questions. This is an emotional relationship. This is about empathy. So no, the human agent will not die. Son, work on making the human agent more customer-centric and more efficient with technology. And that's the story of Wefox. We started 7 years ago, and I think it is time to say that this model is the winner. Insurance is huge. It's an almost infinite market. Insurance used to be the best business model in the capitalistic world. Think about it. You have customers that pay money to insurance companies. These insurance companies don't need to pay the money back straight away, so they can invest the money in capital markets. They make more money for decades and decades in the past just from investing, and on average they pay out a little less to customers than what they paid in. This is a money multiplication machine. And all that CEOs had to do over decades and decades was think about how can I get more money into the money multiplication machine. And this was never about the customer. This was only about pushing products out to sale, via the sales to the customer. And this was really around, dear salesperson, what do you need in order to make get more money into my money multiplication machine? And the sales said, if that's your question, I have a couple of ideas. Make insurance as intransparent as possible, so I can confuse my customers. And ideally, I can sell the same product twice to the customer without him even noticing. Make it really transparent about the prices. I don't want the customer to compare prices. I don't want him, if that's your goal, to understand that he's paying way too much. Make it really complex and opaque. Insurance never had to be this way. So this giant market is up for grabs. And it's up for grabs for players that have the customer and technology at their core. So as I said, there was this model of direct digital insurers. Building an insurance product, an insurance company that really has the customer at the core, that really says, I'm going to create an amazing customer experience, underwriting within seconds, claim payouts really, really fast, make everything super easy to understand. This is only 1 out of 10 policies sold. This model is very, very difficult to crack. Extremely difficult to crack. You have huge competition. So you have huge customer acquisition costs in direct. And in direct, you have the highest loss ratios across all channels because it's negative selection. You get the worst customers on your book. There's not a single company out there that has managed to nail this model yet. One exception maybe, but only because billions and billions and billions were thrown at the market until the book was big enough, and it's Geico. But apart from that, that model has never worked. It is not a scalable model. We have, and that was the advice of my father, only focus on indirect. So indirect meaning for us, brokers. So in Europe we have around 5,000 brokers working for Wefox. Means exclusive advisors, these are on our payroll. So we have around 700 of them. And the newest addition, we're entering the embedded insurance mega trend, is Affinity. And we're mainly selling via car dealers, via OEMs, via electronic stores for e-bikes and so forth. We just launched this channel last year. We already have more than 500 partners live on our platform. It's all indirect sales. What does indirect mean and what are the advantages? The advantages are the CAC is much, much, much lower. Actually zero in many of the distribution channels. So we can scale much faster with lower marketing costs. And because we understand our customer base and we understand the channels really, really well, and by definition, in indirect, the loss ratios are lower, we beat the market with loss ratios. So with the indirect model that we have launched with Wefox, we have lower investment, faster scale, and superior financial profile to other Insurtech peers. And the growth speaks for itself. The older we get, the faster we grow. So last year we've grown by, again, much more than 100%. And we're going to grow this year by much more than 100% again, which is at least 800 million this year. And next year, we're very confident that we're going to grow by another 100% again. We have figured out the magic formula for massive growth at lower than market loss ratios. Smart growth, low loss ratios, that's the key. And how do we do it? We're only around for a few years, so how do we have the data? We said we're going to piggyback, jump on the train of the other insurers. They have all of the knowledge. They have been doing this for decades and decades and decades. We know the markets we're in. We know the pricing of our competitors very, very well. And we exactly understand, where do our competitors underprice because they want to grab market share? So where is the loss zone and where is the profit zone? And we track that in real time, and Wefox only underwrites the profit zone. On the loss zone, we use the technical price. We're way too expensive. This allows us, on the profit zone, the customers we want, to be cheaper than anyone in the market and have an increasing market share. And also, from our history, we're not only selling our own insurance products. We have hundreds of partners in our markets, other insurance companies, that have a different risk appetite than us. We say we only take the profitable customers, the most profitable customers. There's other companies out there that are willing to take other customers with open arms. And these are our partners. We only underwrite the customers that are in our risk appetite, which leads to lower loss ratios than anyone in the market. And this is the model that Wefox is going to replicate in further European markets. But again, we're talking $5.2 trillion industry. And we're talking the success in insurance, in internationalization, that we've seen so many Insurtechs fail in internationalization. The success is guaranteed through success in distribution first and foremost, nothing else. So with our approach of having 3 indirect channels and entering the market with a partner, either an affinity, broker, or exclusive advisors, on the day we start, we already have more sales than some of the Insurtechs have after 2 years in a new market with a direct-only distribution channel. This way, you get the machine rolling on day one. But growth at low loss ratios is only hygiene factors. This has nothing to do with great innovation. Zero. It's only there to make us survive through what we call the valley of death, which many of the other Insurtechs are not surviving. The valley of death means, at the beginning you're hyped, everyone thinks you're great, but the real economies of scale, through technology, only work when you've reached scale. So after an initial hype, and you can't show the results, you're in the valley of death. So you need to get big, very fast. So this, what I explained to you, is only to survive the valley of death. But how do you then become the #1 insurance player in the world by the end of this decade, which is our goal? So, next to growth and low loss ratios, we have identified further priorities where we said we have looked at other insurance companies where they're not doing so well, and we believe we can do a lot better to become the #1 by the end of this decade. So the first thing is, technology really allows us to make the insurance business model interesting, because the risk business has never been interesting, has never been an interesting business model. But now technology all of a sudden allows us to reduce loss ratios sustainably through fraud detection, through the ability for clerks to pay out faster at a discount. It allows us to reduce the admin costs through automation tremendously. We have an automation rate of 90%. It allows us to reduce the sales commissions tremendously. We are currently 4 times more productive than the market, which means, in essence, 4 times lower sales commissions. So at scale, technology can make the risk business attractive. So that's the first priority. The second priority is, if you look at insurance companies, they have an ROE, return on equity, of 10, 12% or something. That's why they're trading so low on the stock markets. If you look at their multiples from premium revenue to their valuation, return on equity is the major topic. And that's because it's very capital intense. We're a technology company. We're not capital intense. So we're all about capital light strategies. Capital light in terms of reinsurance, capital light in terms of debt, capital light in terms of, and I think that's our DNA, becoming one of the best asset managers in the world. Also going into risk, risky investments. I think this is where we're going to be very, very strong. That's the second one, capital light. The third one is innovation. So I feel with the CEOs of large companies. You know why? Because essentially they are in a catch-22. They know they have to invest into technology in order to be the #1 by the end of this decade. But at the same time, their investors request dividends. Squeeze the lemon, squeeze the lemon. So now if they would say, hey, I'm going to reinvest all of my profits into being the #1 by the end of this decade. I'm going to be bold. I'm going to invest into technology. I'm not going to pay out dividends anymore. The investors are going to run away. They're going to say, hey, for decades I'm investing in you just because of the dividends. And the tech investors who are used to this will say, dear CEO, please show me your track record in building global leading tech companies. And then there's nothing. So you're in the middle and you know, have the worst of both worlds. So they can't change their model. We can. We start from scratch. And we're investing everything into technology. And this is really two major things. Number one is what we call risk prevention. So our 2 million customers are not going to just be helped after something bad has happened. Because insurance today is financial protection from uncertain events based on static data. So it's after something bad has happened, you get a financial compensation. But technology allows us to do so much more. It allows us to help you before something bad happens, so that the bad thing doesn't happen in the first place. Make our customers be safe, not just help them after they had a terrible event. This is what technology can do, and this is also interesting from a business model perspective. It drastically reduces loss ratios, much more than any other initiative, and it allows us as a company to charge new types of revenues. Tech revenues, high EBIT margin revenues. So that's risk prevention. The second one is platform. So the platform, from my perspective, is a winner-takes-it-all model in insurance. And when we launched our own insurer, we said we're going to build a platform that allows our own insurer to build products within minutes, to adjust prices in real time, to see in real time what are the profitable segments versus the unprofitable segments, and adjust pricing, and to basically, on the click of a button, launch your product in multiple insurance distribution channels that are connected via API. And we said we're not just building it for us, we're building it to digitize or help digitize the entire insurance ecosystem. And we're inviting all insurers to build products on our platform, and we're inviting all distribution channels to connect to our platform via our API. And then all of a sudden, we're talking transaction volume, and we're talking a fee of the transaction volume, and we're talking really high EBIT revenue, and we're talking significantly higher multiples. So tech revenue trades at 50 to 100x. Premium trades at 1 to 2 max if you're high growth. How the revenue mix is made up and what technology does in insurance plays a huge role. It's about defending the multiple, it's being high growth plus innovative. And this is what makes Wefox the #1 in the world in Insurtech, soon to be the #1 in the world in insurance altogether. We have an amazing team of 1,200 people, growing very, very strongly. Whoever wants to join the rocket ship, drop me a message. Thank you.